Happy Halloween, Bitcoin and cryptocurrency market. As you can see, we just started pumping, and in today's show, we're going to be discussing Bitcoin hitting the $1 billion all-time mark for transaction fees. As you can see right here in this graph, it's official, and this is a pretty big deal. Also, let's not forget, 11 years ago today, Satoshi Nakamoto published the Bitcoin white paper. That's correct. It was launched actually on Halloween. And also in today's show, we're going to be covering the Bitcoin price action. We're going to be sharing what crypto analyst Alex Kruger has to share regarding if we break below $8,000, we'll likely go to $6,400. And if we break $10,500, which we're very close to doing, it will likely move to $12,000. We'll be discussing this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every day. So be sure to smash that subscribe button and click that bell icon to receive notifications of the latest premium crypto news. And to celebrate the launch of our podcast, our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world, is giving away $25 worth of CMDX tokens absolutely free. For full details, click that link right below this video in the description. Welcome back to another episode of Crypto News Alerts. I'm your host, JV. Let's dive right into today's top story. Bitcoin just hit $1 billion in all-time transaction fees. Now, this is a pretty big deal, and this is a milestone because it shows how much people value block space. Founder of the Bitcoin wallet, Bill Fodl, says that's something people don't mind paying for, which I think is really important moving forward. According to data from blockchain analytics startup Blockchair, the amount of Bitcoin transaction fees collected annually has actually decreased in recent years. This is due to advent of scaling solutions on Bitcoin, including segregated witness and Lightning Network. And while the cumulative amount of Bitcoin transaction fees converted to USD amounts to roughly $1 billion, the amount is actually much larger if you consider the market value of Bitcoin today. And if we take a look over at Coin360, it's trading at $9,300 on the dot, up 2.15% in the past 24 hours, and just literally started pumping because 30 minutes ago, before I turned on these cameras, it was in the red along with most of the rest of the crypto market. But that's how fast things can turn around. Bitcoin just pumped $300 to $400 in seconds. That's the nature of the crypto market. You gotta love it at the end of the day. According to Coinmetrics data, 204,808 Bitcoin has been doled out in transaction fees to miners since 2009. At today's price, that's equivalent to $1.86 billion. Let's take a look at this tweet from Yassine on Twitter. It's official. The Bitcoin network has surpassed 1 billion USD in cumulative fee revenue. And as you can see, this chart going parabolic, which is pretty cool to witness. The cumulative size of transaction fees on the Bitcoin network is only set to grow larger in the coming years, especially as alternative mechanisms for rewarding miners, such as block subsidies, gradually decline. Over the long run, the transaction fees will eventually have to replace the block, said Jameson Lopp, CTO of Bitcoin management startup Casa. There's a reason why it's called the block subsidy in the code. It's because it's subsidizing the security of the network, adding, the understanding all along is that this subsidy via inflation will have to be replaced by the people who are paying to use the network via transaction fees. Stepping back, transaction fees play three key roles on the Bitcoin blockchain, all of which serve to secure the integrity and censorship resistance of the network. First, attaching fees to Bitcoin transactions discourages denial of service attacks, also called spam attacks, from the slowing down the network. When you create a transaction, you're able to use bandwidth and write data onto the hard drive of anyone running a node on the network, said Lopp. If there's no cost to doing that, then you can saturate everyone's bandwidth and fill up everyone's hard drive. Second, Fees serve to prioritize which transactions get confirmed and written onto blocks faster than others. David Steinberg, VP of crypto mining consultancy Navier, said, "It's very simple. You pay more, you get your transaction accepted more quickly. So that mechanism is a fair way to participate in a pending transaction pool." Personally, I love that feature. When I'm to send Bitcoin, I could send it faster just by increasing the transaction fee. I like having that priority to do so. What are your thoughts? Let me know in the comments below. Now, finally, and perhaps most importantly, transaction fees also ensure transaction finality. Coupled with the Bitcoin block subsidy, which yields 12.5 Bitcoin per block and decreases by 50% every 4 years. Transaction fees incentivize Bitcoin miners from purposefully stalling or editing the blockchain. Without this monetary incentive, miners could easily be bribed by malicious actors to unfairly withhold all or certain transactions from being committed to the blockchain. So what's ahead from here? We have another 10 to 13 years of decent subsidies left before it drops away to pretty negligible amounts, says Bill Foddles Ald. When this happens, miners will have to start adjusting profitability measures around the comparatively more volatile values of transaction fees as opposed to block subsidies. You have to start thinking more about the game theory around miner profitability and what could happen if the profitability of a miner becomes a lot more volatile from hour to hour, day to day, said Lop. For example, we already know there are both daily and weekly cycles of demand for block space. And in other crypto news, 11 years ago from today, Satoshi Nakamoto published the infamous Bitcoin white paper. That's correct. October 31st marks 11 years since the publication of the Bitcoin white paper by the still mysterious person or group pseudo-anonymously identified as Satoshi Nakamoto. Bitcoin, a peer-to-peer electronic cash system published on October 31st, 2008, outlined a tamper-proof, decentralized peer-to-peer protocol that could track and verify digital transactions, prevent double spending, and generate a transparent record for anyone to inspect in nearly real time. The protocol represented a cryptographically secure system based on proof-of-work algorithm in which Bitcoins are mined for a reward by individual nodes and then verified by other nodes in a decentralized network. This system contained the possibility of overcoming the need for middlemen such as banks and financial institutions to facilitate and audit transactions, a major disruption to siloed, monopolized field of centralized financial power. Thank God, right? I thank God for Bitcoin every day. The all-time appreciation of Bitcoin is literally over 304 million%. 11 years on, Bitcoin is consistently setting new records for its network hash rate, a measure of the overall computing power involved in validating transactions on the blockchain at any given time. More power and participation establishes greater network security and attests to widespread recognition of the profitability potential of Bitcoin mining. As of the middle of this month, network data revealed that since the creation of the very first block on the Bitcoin blockchain on January 3rd, 2009, known in more technical language as its Genesis block, miners have received combined revenue of just under $15 billion. The figures include both block rewards, new Bitcoins paid to miners for validating a block of transactions, as well as transaction fees, which broke the $1 billion mark this week, which we just talked about. Bitcoin's first ever recording trading price was noted on March 17th, 2010, on the now defunct trading platform bitcoinmarket.com at the value of 0.003. Holy crap, right? A fraction of a penny. The cryptocurrency's appreciation thus stands at a staggering 304 million plus % at press time, with Bitcoin currently trading, if we take a look at the market, just above $9,300. And as of this August, 85% of Bitcoin's supply in circulation has been mined, leaving just 3.15 million new coins for the future. And in other crypto news, crypto analyst Alex Kruger shared on Twitter, if Bitcoin breaks $8,000, it will likely go to $6,400. But if it breaks $10,500, it will likely go to $12,000. Some deride speculators who think in those terms. However, that's how markets work, particularly so momentum-driven open markets. And let's take a look at some of the replies. Alex Kruger replied to his own tweet saying, "This may sound haphazard to many, but it generally is less so than most fundamental metrics, most of which have zero predictive value and are simply used to justify a bias." Very interesting point. And checking out some more tweets here, Alex also wrote, "I go by if breaks XXXX, it will likely move a lot in the same direction." Andrew replied, "That's how a market for an asset with no legitimate fundamentals work." Alex responded, "Applies to all markets, but for Bitcoin much more than others because demand is purely speculative." Shayak wrote, "So many, it's your statement by the way. Whales pull up and play pump and dump. Rest is irrelevant." Alex wrote, "Same thing." Daniel Wasserman replied, "Mostly only true due to the self-fulfilling tendencies of these momentum ideas. Clustering of stops and liquidation prices leads to asymmetric liquidity profiles that prolong the depth of these moves." Alex Kruger replied, "Liquidity profiles plus Bitcoin speculators, miners, dynamics, both of which usually amplifies moves." Henry replied, "I can guarantee with 1 million to 1 odds, if Bitcoin breaks 21,000, it will go to $21,050. And if it breaks 900, it will likely go $890. ICO Research Group wrote, "These are fantastic predictions. Well done." And I'm sure to include this resource link below this video in the description so you can check it out for yourself. And taking a look at the overall cryptocurrency market cap is currently $244 billion with 83 billion in volume in the past 24 hours. And the current Bitcoin dominance is 67.6%. And taking a look at the top cryptocurrencies, we can see Bitcoin hovering around the $9,300 mark, up 2.3% for the day. Ethereum up 0.77%, trading at $183. BNB coin up 3.5%, trading at $20. XRP up 0.9%, trading at 29.5 cents. EOS is up 1.82%, trading at $3.29. Miss Litecoin is up 2.42%, trading at $58.98. And of course, rest in peace dead altcoins such as BitConnect. As you can see on this special Halloween day, you got some spiders and some special creepy crawlies hanging around here. Now let's take a look at the top gainers for the day. Molecular Future is up 12.2%, trading at $1.07. Seal is up 10.8%, trading at 6.7 cents. Tezos is up 10.5%, trading at 90 cents. Bytecoin is up 7%, trading at 0.0004. Metaverse ETP is up 6.4%, trading at 48 cents. And Huobi token is up 5.9%, trading at $3.94. And taking a look at the biggest losers in the past 24 hours, Noah Coin down 61.71% after an epic pump we've witnessed in the past couple days. Swipe is down 25%. Holy moly. Trading at 0.99 cents. iExec RLC is down 12%, trading at 59 cents. Centrality is down 7%, trading at 10 cents. Nash Exchange is down 6.8%, trading at $1.15. And Bitcoin Satoshi Vision down 3.8%, trading at $129.27. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying with me on this Bitcoin rocket ship straight to the moon. If you haven't already, be sure to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And before I go, I want to give a special thanks to our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world. To celebrate the launch of our podcast, they're giving away $25 worth of CMDX tokens absolutely free. For full details, click the link right below this video in the description and claim your free cryptocurrency. I look forward to seeing you on tomorrow's episode. Peace.